If you're a trader, we have one of the most important data points coming out in just a couple days, so I'm going to break it down. The Federal Reserve just cut 3 times in a row and then suddenly stopped. There's currently a 97% chance that they don't cut rates next meeting, and here's what retail traders are missing. The September, October, and December meetings, the Federal Reserve cut a total of 0.75 basis points in an effort to engineer what they call a soft landing, by bringing inflation down without crashing the job market. So if they were cutting every meeting, why are they currently stopping while everyone is screaming for rate cuts? That's a couple things. And first, inflation stopped falling as fast as the Fed was expecting, with PCE, the Fed's preferred measure of inflation, ticking up last week and still well above their 2% target. Secondly, the labor market just isn't collapsing like how the Fed thought. Later last year, the Federal Reserve was really worried about the labor market, but unemployment has slowly been ticking down, and NFP also showed signs of optimism earlier this month. The Fed is looking at this data and saying, okay, well, we cut enough, we can pause and see what happens. And that's what Wednesday is all about. But here's the thing, everyone knows the Fed isn't going to change interest rates, and that's well priced in. The real trade is going to be what Powell has to say after the press conference about future rate expectations. The problem with a lot of traders is that they think no cut means that it's bad for the stock market, but that's completely backwards. No cut means that the economy is strong enough that the Federal Reserve doesn't need to come in to rescue it. And it's actually bullish, not bearish. This is exactly why most traders lose money on Fed days. They just trade the actual rate decision itself and not the actual expectations. So I have an in-depth video breaking down FOMC. If you guys want it, comment FOMC and I'll send you guys over the link.